Question 1. Which of the following best describes the principle of indemnity in insurance? A. Policyholders are entitled to profit from a covered loss. B. Insureds are restored to the same financial condition they were in prior to the loss. C. Insurers are obligated to pay claims regardless of policy terms. D. Damages are paid only if the loss is catastrophic. Answer: B. Insureds are restored to the same financial condition they were in prior to the loss. Explanation: the principle of indemnity ensures that an insured is returned to their pre-loss financial state, preventing them from profiting from a loss. This core concept in insurance means the adjuster's goal is to make the insured whole again, not to improve their situation or let them gain financially from the event. For example, if a car is totaled, the insured receives its actual cash value, not enough money to buy a brand new vehicle. Understanding indemnity is fundamental for adjusters in fair claim evaluation and settlement. Question 2. An insured's car is stolen. The policy includes a salvage condition. If the car is recovered, what does the salvage condition allow the insurer to do? A. Require the insured to keep the recovered car and pay a reduced claim. B. Take possession of the recovered car after paying the full claim. C. Demand that the insured pay for the recovery costs. D. Reduce the claim payment by the deductible amount only. Answer: B. Take possession of the recovered car after paying the full claim. Explanation: the salvage condition in an insurance policy allows the insurer to take possession of damaged or recovered property after they have paid the full claim for that property. This means if the insurer pays the insured for a stolen car, and the car is later found, the insurer can take ownership of the recovered vehicle, which they can then sell to offset their loss. This concept is important for adjusters to understand when handling total losses and property recovery. Always remember that salvage benefits the insurer by allowing them to recover some costs after a total loss payment. Question 3. What is the primary role of a public adjuster? A. Represents the insurance company in settling claims. B. Works as an employee of an independent adjusting firm. C. Represents the insured in negotiating a claim with the insurance company. D. Handles claims for federal government agencies. Answer: C. Represents the insured in negotiating a claim with the insurance company. Explanation: a public adjuster is uniquely licensed and hired by the insured to advocate on their behalf during the claims process, aiming to achieve the most favorable settlement from the insurance company. Unlike company or independent adjusters who represent the insurer, a public adjuster's loyalty lies solely with the policyholder. For instance, after a complex property loss like a fire, an insured might hire a public adjuster to manage the damage assessment and negotiations, ensuring their interests are protected. Knowing the different types of adjusters and who they represent is crucial for understanding the claims landscape. Question 4. Which of the following is considered actual cash value, ACV, when settling a property claim? A. The cost to replace the damaged property with new property at current market prices. B. The original purchase price of the property when it was new. C. Replacement cost less depreciation. D. The market value of the property prior to the loss. Answer: C. Replacement cost less depreciation. Explanation: actual cash value, ACV, is a common method for valuing property in a claim, calculated by taking the cost to replace the damaged property with new material or items of like kind and quality, and then subtracting an amount for depreciation. Depreciation accounts for wear and tear, age, and obsolescence. For example, if a 10-year-old roof with an expected lifespan of 20 years needs replacement, its ACV would be roughly 50% of the cost of a new roof. Adjusters must master ACV calculations, as it directly impacts the claim payout for many types of property losses. Question 5. In the context of property insurance, what is subrogation? A. The insured's right to abandon damaged property to the insurer. B. The insurer's right to pursue a third party responsible for a loss paid to the insured. C. The process of resolving disputes between the insured and insurer through arbitration. D. The insured's duty to protect property from further damage after a loss. Answer: B. The insurer's right to pursue a third party responsible for a loss paid to the insured. Explanation: Subrogation is the legal right of an insurer, after paying a claim to its insured, to step into the shoes of the insured and pursue recovery from a third party who caused the loss. For instance, if an insured's car is damaged by another driver, the insured's insurer pays for the repairs and then has the right to recover those costs from the at-fault driver's insurance company. This principle prevents the insured from being compensated twice for the same loss and helps control insurance costs by shifting financial responsibility to the negligent party. Question 6. A notice of loss typically refers to what in the claims process? A. The formal denial of a claim by the insurer. B. The initial notification from the insured to the insurer that a loss has occurred. C. The adjuster's final report submitted to the insurer. D. A document detailing the amount of the claim settlement. Answer: B. The initial notification from the insured to the insurer that a loss has occurred. Explanation: A notice of loss, also known as first notice of loss, FNOL, is the very first communication from the insured or their representative to the insurer informing them that an event triggering potential coverage has taken place. This initial notification is crucial because it formally begins the claims process and allows the insurer to initiate investigation and response. For example, calling the insurance company after a car accident is providing a notice of loss. Always remember that prompt notice is often a policy condition and essential for a smooth claims experience. Question 7. Which of the following is an example of an indirect loss in property insurance? A. Damage to a building caused by a fire. B. Theft of personal property from a home. C. Loss of rental income because a damaged apartment building is uninhabitable. D. A tree falling on a car during a storm. Answer: C. Loss of rental income because a damaged apartment building is uninhabitable. Explanation: An indirect loss, also known as a consequential loss, is a financial loss that occurs as a result of a direct loss but is not the direct physical damage itself. While the fire that damaged the apartment building is the direct loss, the lost rental income due to the building being uninhabitable is a direct consequence of that fire. Understanding the distinction between direct and indirect losses is vital for adjusters to determine what coverages might apply, as many policies include specific endorsements or provisions for indirect losses like business interruption or loss of rents. Question 8. What is the purpose of an appraisal clause in an insurance policy? A. To determine if the insured has an insurable interest in the property. B. To resolve disputes regarding the cause of loss. C. To determine the value of property or the amount of a loss when the insured and insurer disagree. D. To assess the financial stability of the insured prior to issuing a policy. Answer: C. To determine the value of property or the amount of a loss when the insured and insurer disagree. Explanation: An appraisal clause is a dispute resolution mechanism included in many property insurance policies, allowing both the insured and the insurer to hire their own independent appraiser when they cannot agree on the amount of loss. These two appraisers then select an umpire, and a decision agreed upon by any two of the three, one appraiser and the umpire, or both appraisers, becomes binding on both parties. This process helps avoid litigation and provides a fair method for determining the value of damages, like the extent of hail damage to a roof, when there's a difference of opinion. Question 9. In the context of a bad faith claim against an insurer, what does the insurer typically fail to do? A. Pay a claim promptly and fairly after proper investigation. B. Offer the lowest possible settlement amount. C. Encourage the insured to seek legal counsel. D. Provide the insured with a copy of their policy. Answer: A. Pay a claim promptly and fairly after proper investigation. Explanation: Bad faith claim against an insurer arises when the insurer fails to act in good faith towards its insured, typically by unreasonably denying a claim, delaying payment, or refusing to properly investigate. Insurers have a legal duty to act in good faith, which means they must deal fairly and promptly with their policyholders. For example, an insurer repeatedly ignoring an insured's calls about their claim or refusing to provide a reasonable explanation for a denial could constitute bad faith. Adjusters must always operate within the bounds of good faith to protect both the insured and the insurer. Question 10. Which policy section outlines the perils covered and promises to pay for losses that occur? A. Declarations. B. Conditions. C. Insuring agreement. D. Exclusions. Answer: C. Insuring agreement. Explanation: the insuring agreement is the core of an insurance policy, detailing the insurer's promise to pay for losses caused by covered perils in exchange for premium payment. This section explicitly states what is covered, setting the scope of protection provided. For example, a homeowner's insuring agreement might state coverage for fire, lightning, and windstorm. Understanding the insuring agreement is crucial for adjusters to determine if a loss falls within the policy's coverage. Question 11. What is the primary purpose of a proof of loss form? A. To notify the insurer that a loss has occurred. B. To allow the insurer to inspect the damaged property. C. To provide the insurer with the formal documentation and sworn statement of the damages claimed. D. To authorize the repair of the damaged property. Answer: C. To provide the insurer with the formal documentation and sworn statement of the damages claimed. Explanation: a proof of loss form is a formal, sworn statement submitted by the insured to the insurer, detailing the damages, the cause of loss, and the amount claimed. It acts as a formal demand for payment and provides the specific information the insurer needs to finalize its evaluation and settlement. For instance, after a house fire, the insured would submit a proof of loss listing all damaged items and their estimated values. Adjusters rely on this document to complete the claim process, so timely and accurate submission by the insured is important. Question 12. In liability insurance, what does bodily injury (BI) coverage typically pay for? A. Damage to the insured's own property. B. Medical expenses and lost wages for people injured by the insured's negligence. C. Legal defense costs for the insured regardless of fault. D. Damage to other people's property caused by the insured. Answer: B. Medical expenses and lost wages for people injured by the insured's negligence. Explanation: bodily injury (BI) coverage and liability insurance primarily pays for the expenses related to physical harm caused to other people due to the insured's negligence, such as medical bills, lost wages, and pain and suffering. This coverage protects the insured when they are found legally responsible for injuring others. For example, if an insured driver causes an accident that injures another person, their BI liability coverage would pay for that injured person's hospital bills and lost income. Adjusters handling liability claims must understand BI limits and what types of damages it covers for third parties. Question 13. Which of the following is typically a duty of the insured after a loss occurs? A. Abandon the damaged property to the insurer. B. Begin repairs immediately without notifying the insurer. C. Protect the property from further damage. D. Negotiate a settlement with a third party responsible for the damage. Answer: C. Protect the property from further damage. Explanation: a common condition in insurance policies is the insured's duty to protect the damaged property from further loss, often referred to as mitigating damages. This means taking reasonable steps to prevent additional harm after a covered event, like boarding up broken windows after a storm or turning off the water supply after a pipe bursts. Failing to take such steps could lead to a reduction in the claim payout. Adjusters frequently advise insureds on these immediate responsibilities to minimize the overall damage and expedite the recovery process. Question 14. What is the main difference between a staff adjuster and an independent adjuster? A. Staff adjusters handle only large, complex claims, while independent adjusters handle small claims. B. Staff adjusters are employees of the insurer, while independent adjusters work for multiple insurers on a contract basis. C. Staff adjusters focus on property claims, while independent adjusters handle only casualty claims. D. Staff adjusters are licensed, while independent adjusters are not required to be licensed. Answer: B. Staff adjusters are employees of the insurer, while independent adjusters work for multiple insurers on a contract basis. Explanation: a staff adjuster is a salaried employee of a specific insurance company, handling claims exclusively for that insurer. In contrast, an independent adjuster is a self-employed individual or part of an adjusting firm who is hired by various insurance companies, often on a temporary or case-by-case basis, particularly during catastrophes or in remote areas. For instance, after a hurricane, an insurer might bring in many independent adjusters to help manage the surge in claims. Understanding these roles helps clarify who represents whom in the claims process. Question 15. The declarations page of an insurance policy typically includes which of the following? A. The duties of the insured after a loss. B. The specific perils that are excluded from coverage. C. The name of the insured, policy limits, and policy period. D. The general conditions that apply to the policy. Answer: C. The name of the insured, policy limits, and policy period. Explanation: the declarations page, often called the deck page, is the front page of an insurance policy and provides a summary of essential information specific to that policy. It includes the policyholder's name, the policy number, the types of coverage purchased, the limits of liability, the deductible amounts, and the effective and expiration dates of the policy. This page acts as a quick reference guide to the policy's key terms and is crucial for an adjuster to verify coverage and policy details at the start of a claim investigation. Question 16. What is the primary function of an emergency adjuster during a catastrophic event? A. To handle only fraudulent claims. B. To assist licensed adjusters in administrative tasks. C. To temporarily handle claims in a designated catastrophe area without full licensing, typically under supervision. D. To provide legal advice to insureds affected by the catastrophe. Answer: C. To temporarily handle claims in a designated catastrophe area without full licensing, typically under supervision. Explanation: an emergency adjuster, often utilized during widespread catastrophic events like hurricanes or large-scale floods, is granted temporary authority by state insurance departments to handle claims in a specific disaster area. This allows insurers to quickly increase their claims handling capacity to meet the sudden surge in demand, even if these adjusters don't hold full licenses for that state, though they usually operate under the supervision of a fully licensed adjuster. This role is vital for providing rapid response to victims of major disasters. Question 17. Which of the following best describes the proximate cause of loss in insurance? A. The most remote cause of the loss. B. The immediate cause of the loss, regardless of contributing factors. C. The direct, efficient cause that sets in motion an unbroken chain of events leading to the loss. D. Any cause that contributes to the loss, even if minor. Answer: C. The direct, efficient cause that sets in motion an unbroken chain of events leading to the loss. Explanation: proximate cause is a legal concept in insurance that refers to the direct, efficient cause of loss that, through an unbroken sequence, leads to the damage or injury. It's the primary cause, not necessarily the closest in time or space, that makes the loss happen. For example, if a fire caused by faulty wiring leads to smoke damage and water damage from sprinklers, the faulty wiring, the fire's cause, is the proximate cause of all the related damages. Adjusters must carefully determine the proximate cause to confirm if a loss is covered under the policy. Question 18. An exclusion in an insurance policy serves what purpose? A. To broaden the coverage provided by the policy. B. To outline the responsibilities of the insured. C. To specify perils, property, or situations that are not covered by the policy. D. To define the limits of liability for specific perils. Answer: C. To specify perils, property, or situations that are not covered by the policy. Explanation: exclusions are sections within an insurance policy that specifically list perils, types of property, or circumstances that are not covered, thereby limiting the scope of coverage. For example, most standard homeowners policies exclude flood damage. Understanding exclusions is critical for adjusters to accurately determine if a claim falls within the policy's boundaries. Always consult the exclusions to ensure the loss is not specifically listed as uncovered. Question 19. What is a deductible in an insurance policy? A. The maximum amount the insurer will pay for a covered loss. B. The portion of a covered loss that the insured must pay before the insurer pays. C. The premium charged by the insurer for coverage. D. The amount paid by the insurer to a third party for subrogation. Answer: B. The portion of a covered loss that the insured must pay before the insurer pays. Explanation: a deductible is the amount of money the insured is responsible for paying out of pocket towards a covered loss before the insurance company begins to pay its share. For instance, if an insured has a $1,000 deductible on their auto policy and incurs $3,000 in covered damage, they would pay the first $1,000, and the insurer would pay the remaining $2,000. Deductibles help control premium costs and discourage small claims, so adjusters must always apply them correctly when settling claims. Question 20. When an insured suffers a loss, and their property is damaged beyond repair, the insurance company may have the option to pay the stated value, if specified in the policy. What does stated value typically refer to? A. The current market value of the property at the time of loss. B. The original purchase price of the item. C. An agreed-upon amount that is the maximum the insurer will pay for a total loss of a specific item, determined at the time of policy inception. D. The actual cash value of the property at the time of loss. Answer: C. An agreed-upon amount that is the maximum the insurer will pay for a total loss of a specific item, determined at the time of policy inception. Explanation: stated value coverage, sometimes confused with agreed value, means that the insurer will pay up to the stated amount, which is agreed upon at policy inception, often based on an appraisal, or the actual cash value of the item at the time of loss, whichever is less. This contrasts with agreed value, where the insurer pays the full agreed amount regardless of ACV. For example, a collector's item or antique car might be insured for a stated value of $50,000, meaning the insurer won't pay more than $50,000, but might pay less if its ACV at the time of loss is determined to be lower. Adjusters must understand the difference to properly value unique items. Question 21. Which type of adjuster is typically an employee of a specific insurance company and handles claims on its behalf? A. Public adjuster. B. Independent adjuster. C. Staff adjuster. D. Catastrophe adjuster, CAT adjuster. Answer: C. Staff adjuster. Explanation: a staff adjuster is a direct employee of an insurance company, meaning they work solely for that insurer and are on its payroll. They are responsible for investigating, evaluating, and settling claims filed by that company's policyholders. For example, a staff adjuster for ABC Insurance Company would only handle claims for ABC's insureds. This distinguishes them from independent adjusters who work for multiple companies on a contract basis and public adjusters who represent the insured. Question 22. What is the primary purpose of personal injury protection, PIP, coverage in an auto policy? A. To pay for damages to another person's vehicle in an accident. B. To cover the insured's liability if they injure someone while driving. C. To provide medical expenses and lost wages for the insured and their passengers, regardless of fault. D. To pay for physical damage to the insured's own vehicle. Answer: C. To provide medical expenses and lost wages for the insured and their passengers, regardless of fault. Explanation: Personal injury protection, PIP, coverage, often referred to as no-fault coverage in states where it's mandatory, primarily pays for medical expenses, lost wages, and sometimes other related expenses, like rehabilitation, for the insured and their passengers who are injured in an auto accident, regardless of who was at fault. This helps ensure immediate access to necessary care without waiting for fault determination. For example, if an insured is in a car accident and gets injured, their PIP coverage would pay for their medical bills, even if they were the at-fault driver. Adjusters in no-fault states heavily rely on PIP to manage initial injury claims. Question 23. An endorsement in an insurance policy serves what function? A. It replaces the entire policy with a new one. B. It increases the policy premium by a fixed percentage. C. It modifies or adds to the original terms and conditions of the policy. D. It provides a summary of the policy's primary coverages. Answer: C. It modifies or adds to the original terms and conditions of the policy. Explanation: An endorsement, also known as a rider, is a written amendment attached to an insurance policy that modifies, clarifies, or adds to the existing terms and conditions. Endorsements can broaden coverage, restrict it, or add entirely new coverages. For instance, a homeowner's policy might have a sewer backup endorsement to add coverage for water damage from sewer backups, which is typically excluded in standard policies. Adjusters must always check for relevant endorsements, as they can significantly alter the coverage applicable to a claim. Question 24. What is coinsurance in a property insurance policy? A. A provision that requires the insured to share the loss with the insurer even after the deductible. B. A provision that requires the insured to carry insurance equal to a specified percentage of the property's value, or be penalized in a partial loss. C. A type of insurance where multiple insurers share the risk on one policy. D. The portion of a claim paid by the insurer after the deductible is met. Answer: B. A provision that requires the insured to carry insurance equal to a specified percentage of the property's value, or be penalized in a partial loss. Explanation: Coinsurance in property insurance is a clause that encourages policyholders to insure their property for a certain percentage, e.g., 80%, of its replacement cost. If the insured fails to meet this requirement, they become a co-insurer for any partial loss and will receive a reduced payout. For example, if a building worth $500,000 has an 80% coinsurance clause but is only insured for $300,000, instead of the required $400,000, a partial loss would be paid proportionally less. Adjusters frequently encounter coinsurance clauses when calculating partial losses on commercial properties. Question 25. Which term describes the process where an insured voluntarily gives up their rights to damaged property to the insurer, typically for a total loss? A. Subrogation. B. Salvage. C. Abandonment. D. Appraisal. Answer: C. Abandonment. Explanation: Abandonment refers to the insured's voluntary relinquishment of their rights to damaged property to the insurer. Insurance policies typically contain a clause that explicitly states the insured cannot abandon damaged property to the insurer without the insurer's consent. This is because the insurer usually prefers to exercise its right of salvage, meaning they want to decide what happens to the property after paying a claim. For example, an insured cannot simply leave a flood-damaged car and demand a total loss payout without the insurer agreeing to take possession. Adjusters must be aware of anti-abandonment clauses to manage property claims correctly.